Explain how someone's going to stay in their home if rates keep going up and they're already at their trigger rate. Break down a real-life budget of someone making $100K if they bought an average home at $500,000. Thoughts on Fredericton building tiny home communities to provide affordable housing. Is this a good time to go full-time as a realtor? Spring market in Halifax, time to buy or is it going to go crazy? Is there a place to check what units sold for specifically in Kelowna? Best career in the real estate industry. You got sewer scope guys.
Yeah.
You got home inspectors. You got builders, developers.
When I was broke, I had rich habits. When I was broke, I had rich habits.
Yes, as I was telling you, Chandler, you've converted me to voice to text. Partially.
Oh my God.
While driving.
While sitting on the kid.
What are... Yeah, voice to text, just chatting away.
Voice to text. Non-
It's like, oh, what?
Stop.
Cannot compute.
Oh, man. We've resorted to bathroom humor the lowest of the low.
What is the legality on that, though, is the question.
The legality
Of being able to voice to text. It's hands-free.
Texting.
I've mentally
I don't know, you
prepared.
still have to press the button.
I'm mentally prepared to get pulled over and explain to them that, like, it's hands-free, man. Like, I'm not touching my phone. I'm talking to my phone.
And how are they going to... Man, how would you get pulled over?
You also don't have to push your button if you have an iPhone and
This episode is brought to you by Voice to Text.
a cooler car.
If you're not Voice to Text...
Say, hey, Siri, send Neal a text. I'm going to be 20 minutes late for the pod today.
Yeah, that sounds about right. That's in your auto-drafted messages, I think.
As I said that, hey, Siri opened up and started shooting the message off.
That's wild. Yeah, voice to text is a game changer, man. Change your texting style, change your life. Save the cheerleader, save the world.
I do agree, and I think everyone's going to be doing it. Maybe.
You like that?
That was a
Oh,
lot.
a little Heroes reference.
I wouldn't get it.
The show really unraveled after season 1. Some of you will know what I'm talking about. What's going on, Neal?
Not too much. Just debating my life as I always am, and as everyone who listens knows, I'm like, the world is ending, and I'm still standing by the fact that I think the world might be ending. But today we'll get more into it.
Today you're super bullish. You're like, I just want to buy everything and retire.
I said I'm getting all my refis, and I would like to put it all into decently well and returning real estate, and then
Doesn't
chill
exist.
out. I just want to buy everything with CMHC. I'm not going to kick anybody out,
Oh, wow.
and I'm just let the rents do their
I
thing.
cannot wait to see the edit of this on Reddit
Oh yeah.
in the future when you kick people out.
If you don't pay your rent or
Yeah,
you're
yeah.
destroying the
No,
unit,
of course.
then
No,
yes,
but
you're going to get kicked the hell out of the unit. But no, at this point, I'm not actively going to be flipping over units. Once I'm done we got 3 buildings left.
the one advantage of your refi taking 3 years is that you've really built equity in those properties while you've been going through these refis, because these are the never-ending refis.
I only closed on them 13 months ago, so it's not that long for having to get everybody out and do the work.
Really?
Yeah, because I looked at all my enviros. All my enviros were January of 2022. Same here. In my head, I was like, man, I've had these for like so long. And then I was sitting back there and I'm like, January 2022? The hell? And I remember I held up the closing on the enviro. So it's not that. And my other one that I'm ripping through right now, the enviro was July of 2022. So it's not.
Seems like just yesterday you were digging those basements up.
I didn't think I bought anything last year. Those basement, the ones that I had to dig the basements on were 2 years old. But those buildings were already done. Everyone had moved in. Then I had to dig them out and then refill them. So we're refilling them now.
God.
And we're refining them for a second time because bought them privately, renovated, filled them, refied them, enviroed, ripped
Refilled
them apart,
again.
emptied them, refilled them again,
my
and now we're
God.
applying for a new refi because I'm going to CMHC them this time. But
The system works.
the system works perfectly, and interest and bank fees are just non-existent. But if you make a really good buy, then you don't have to worry about it as much.
Yeah, only make money on the buy. So today we're gonna do a lot of Q&A stuff today because a lot of really good questions came in. We sent out the call, you guys answered, so appreciate that. As always, like, follow, subscribe, comment down below. A lot of you watch the videos and don't subscribe. We can actually see how that works. So just you're watching the video, just press like or press the subscribe button. We really appreciate it. And those of you that threw us up, that's also awesome on your social media, your stories. We love seeing the reaction of everyone on Monday when the episode drops. You guys are really supporting and we appreciate it.
We have a role reversal going on. Our shirts.
Oh, yeah.
Nice shirt.
Thanks. It's a little busy, maybe.
I'm going to give you credit on the glow up. You know, I've gotten some messages being like, Chandler went through a glow up, and someone messaged me and said, I want to know what that guy's on because
That's hilarious.
That's good though. You've been going
yeah.
hard with the trainer and everything.
Well, you know what? I don't know if he watches this or not, but I have.
I mean, you've only shouted him out 98 times. If he hasn't mentioned it by now, he's probably not listening to your podcast.
But I'm resting on my laurels a little too much. I flatlined. I need to step it up again and
really it shows. What are you doing?
Get back on the grind. But
with you.
Yeah, you're just going casual.
I've become casual man now. I'm just.
It's the Enfield. You went out and you just bought all kinds of plaid shirts and loose fitting denim.
It is. For those that aren't from Halifax, I moved 20 minutes outside of Halifax, which in any normal city, shouldn't say normal, in any bigger city, nothing would really change. But in Halifax, moving 20 minutes outside the city,
that is the most generous 20 minutes I've ever heard in my life.
I mean, from the boundary of the city, I'm like 1 minute.
That's because you are just outside the city limits. But like,
I am.
You're in a different municipality. You pay different property taxes than us. Actually, you're not an authority to speak on Halifax property tax anymore.
But that does also say that people who live in like fucking West Chesapeake are still within the city limits, and they're like 48 minutes.
You're 48 minutes.
I'm not 40. I could run home in 48 minutes. I am 23 minutes from our office. 23 minutes from our office.
You don't even take the stairs here. This guy's going to run home in 48 minutes.
I am 23 minutes
2-minute miles
from our office in Remax, which is right in the middle of things. And I'm about 30 minutes, say 35 on a normal day to downtown. If it's like no traffic, it's 30 minutes. Anyways, where I'm going with this is...
either of those numbers 20?
I'm 20 minutes from Burnside.
Oh, it's 20 minutes from the industrial park.
24, 23.
Okay, cool.
Burnside is not the outskirts of town. Anyways, Chandler, as I was saying, the world changed dramatically in those 20 minutes, those 30 minutes.
Yeah.
And so, I have now I wear plaid.
You get your water from a lake?
I have my own drilled well, thanks.
Now you do. Yeah.
I had to.
Yeah.
But, anyways, no, I just wanted to compliment you, and you couldn't just take it. You had to come at me.
I was just saying,
nice,
you know what?
Nice shirt, guys
sensitive.
on a glow up, and then he just fucking went in on me.
I do appreciate it. It's nice of you to say, and it's nice of you listeners out there to notice too.
So, anyways, today, like Chandler said, we're gonna do a bunch of Q&A. We sent out a call. You guys gave us a bunch of questions. We also just get a lot in the DMs, which keep doing. We try and answer them as best as we can, but I think we're gonna try and compile them because the volume's kind of picking up, and so we're gonna try and answer them on the pod.
Yeah.
You had some news stuff you want to talk about today.
Man, where to begin? Where to begin?
Yeah. So again, I think our main topic today is going to be Q&A, and we're going to just try and really debunk any of the questions. There's some good questions in there, especially regarding where the market's going, how people are going to afford to kind of get through this with inflation, rates, like everything we've kind of talked about before, what people should be doing, what kind of moves should they be selling, refining, what makes sense. So hopefully one of these questions relates to you and you can get something from it. But before we get into that, hit me with some news items. I have some stuff I want to talk to you too as well, but
okay.
I'll let you go first.
Well, let's talk about the Silicon Valley Bank collapse. You following this? SVB, which sounds like a all-girl R&B group from the 90s. I'm thinking of SWV, Sisters with Voices. Who out there gets that one? SWV? Come on.
No, I have no idea what you're talking about.
So SVB, Silicon Valley Bank, is no more, at least the U.S. arm. I think the U.K. arm got bought up by HSBC, but
yep.
What are your thoughts? Did you follow along? This you're a big tech guy. You're
not a big startup world. I am not a big tech guy. I'm not in the startup world.
But
I do follow it a bit.
In that world, yeah.
I am interested in that stuff. But I looked into it a little bit. The biggest thing, like takeaway for me was, I saw a funny thing on Cramer. Jim Cramer made comments about how it's a good bank to look at, like maybe 2 weeks ago, and then sure enough, it just collapsed immediately. And so now he's reannouncing it. Yeah, and he hits that button. But no, I think it kind of, like, for me, I wasn't really focused on SVB, but it's the concept of what took place. And when everyone withdraws their money, these banks don't have any opportunity to actually, like, they don't have the money to give out. Yep. And then they start selling their assets and their investments at a loss to try and pay everybody out. And then it starts kind of this domino effect where it starts knocking out other banks because a lot of banks have their money tied up, big swaths of it with other banks. And so when they have to pull from them, then the other bank has to pay out, and you get this domino effect going on. But the government stepped in really quickly to cover all of the lost deposits, because right now, like, the rule in the States is that an insured bank, the government covers up to $250,000 of your deposit.
Yep.
Obviously, lots of people had more than that in that bank, especially it being Silicon Valley. I'm sure there's lots of people, a good, almost not majority, but a large percentage would have over 250 grand in there.
Oh yeah, there's one of their clients, big clients, was like Roblox.
Yeah, so
Another one was like Hulu.
Yeah, exactly.
Pretty big reserve. Now those companies would have started with them because, so for
what I was going to say before,
sorry,
it was that the bank, the government has now stepped in to say we're going to cover anything over $250,000. And I think that's to try and stop the pandemonium and the panic and nip it in the butt right before it can blow over and be this crazy thing of like all these stories of like, I had $2 million, which is my life savings in this bank, and now I lost it all. I got 250 grand back. And so they're cutting it there and trying to stop it. But I think it is pretty telltale. And it's almost to be expected where Silicon Valley, it's like the most propped up companies and everything there is super propped up. And it's like this amazing thing. When things are doing great, they're doing 10x great. Like they're just the best. But on the flip side, when things start going bad, they'll also do 10x the bad. And this is like the prime example. And they're likely going to be the first to go, but it's an indicator of what's to come. And that seems to be the sentiment in the market, hence why bond markets are falling and it's getting a bunch of news. But I think at the same time, it's getting a bunch of news, but it's also not getting a bunch of news. And I feel like they're kind of like, this is where like the larger forces are at play, trying to keep this like quiet as much as possible.
Yeah, I mean, it's not a good omen. It's funny because we've been doing this podcast now for a couple of years, and we can recall how bullish the tech industry was, and all of these startups were bringing in so much cash. There was no shortage of people looking to invest in these startups. And then we also started to see as the economy slowed and people got a little more fearful, there was a bit of pullback on that money, and there were hiring freezes and even some layoffs in the tech sector. This is... People have kind of asked me already, how did this happen or what happened? And it's sort of really complicated, but also quite simple. Remember, when you put your money into the bank, the way it works is they give you a very small amount of interest on the money you deposit in order to take your money and lend it out at higher interest to make money off of it. And the fractional reserve banking model means they actually only need to keep a tiny bit of the total deposit, and the rest they're free to lend out, because what are the odds that everyone's going to come back and want their money all at once? So what happened during the peak of the economy, they were bringing in deposits. Obviously, a lot of companies were making a lot of money, and they're bringing their money to the bank. And the bank, if it's just holding on to that money, it's doing them no good, especially as inflation happens. Like, they're losing money on that money. So they've got to go out and try to lend it. The problem was they're a smaller bank. They're almost like an alternative bank. And the banking system in the U.S. is a little bit different. They're all these smaller, relatively smaller,
There's 16
less regulated.
in the USA.
Compared to we have 5 here, right?
Yeah.
When the economy was coming along and money was cheap, all of their normal clientele that they would normally lend to could go to any bank in North America and get loans. And chances are they would maybe go to one of the top 5 big banks instead of going to the 16th bank. So Silicon Valley Bank had this problem where they could not lend out enough money. There weren't enough takers for their money. So what they decided to do is they're like, well, we'll buy some bonds. And as you guys know, when you buy a bond, you kind of lock in the yield. And they were buying bonds at a time where bonds were returning super low returns, but they didn't think it was a concern because interest rates were low, and they assumed that as interest rates went up, it would probably happen at a slow pace. However, as you know, the Fed jacked the interest rates through the roof, and so the expected return on bonds that people wanted went up and up and up, and all of a sudden they were stuck with these bonds. Just hypothetically, say you had a bond to sell, and it was returning 2% interest, and the market out there for bonds wanted 5% interest. All of a sudden, your bonds aren't worth crap, right? And they had this concern of, all right, we've lost money on these. We need to cut our losses on those. So they dumped a bunch of them, and they lost something like $2 billion.
1.8
and
bill.
When you go out there and lose $2 billion as a bank, people start to get a little bit nervous, and people started to withdraw their funds from the bank. Simultaneously, a lot of the higher up people at the firm, like the CEO, all these executives, they started liquidating their shares of the bank. And it doesn't take long for that word to spread. And everyone went in at once, said, I want my money back. And like, we do not have it because we only keep 10% on hold. And that's how that situation escalated. So, we talk about the bond stuff here a lot, and it's pretty boring, but this is how it actually starts to matter in the real world. And it's hard to say what the trickle down will be of this. It's all about consumer confidence, right? I think
It's sketchy because even though they're 16th in the States, they're probably still comparable to close to like our big five here.
no, our big five are massive. Our big five are international.
Maybe not
They're
big five,
bigger.
but they'd be close to like a First Nat.
Oh, they're probably bigger than a First Nat, but yeah.
Yeah.
Yeah, they're not small by any stretch. I'm just saying, they got squeezed out in the sense that they operate in a space where they have, kind of alternative clients that one day when they hit it big, they kind of move on from them. They kind of go to more conventional lenders, and so they couldn't lend out their money as much as they wanted to get any returns, and so they got hosed on basically a squeeze of their bond holdings.
Yeah, 100%. Like I said, it's just for me, the only really big concern is what it shows, what's coming down the pipe. And it's sketchy because a lot of banks are invested in other banks.
Yeah.
As you said, it's the same situation where they need to get the money out. And so sometimes they'll just put them into more low returning items, which are investing in other banks and bonds. And everyone's taking this hit right now where there's bonds are yielding way more. So the bonds that they carry are worth way less.
Yeah. And as interest rates and inflation goes up, you expect your bank, like the money that you put into
To
the
help
bank,
pace that.
to go up as well. And so this was the issue. Everyone that was putting money in was like, hey, we want whatever return on the money we put in with your bank.
Mhm.
And they had gone out and bought investments at a fraction of that,
Mhm.
right? So they cannot give you, the consumer, an interest rate of 2% return on your money if they've bought a bunch of things at 1.5%. They're literally losing money every time. So that's why they had to liquidate. And it didn't work. I don't know if there was a strategy whereby it could have been better done. Whatever method they decided on, it wasn't received well by the public. And maybe this was simultaneous with a shift away from Silicon Valley with some of these technology companies, the companies themselves sort of feeling a little bit less confident and looking at their cash holding positions, all this stuff, perfect storm, whatever you want to call it.
I think it's, yeah. The one thing I just want to correct is that I think they have to sell because their asset book loses value, but it's like if you owned real estate, make it a little more simple because I think it can be kind of confusing, is if you bought a bunch of real estate and you're returning 5% and it's worth $1 million because it returns 5%, when that return starts to dwindle or there's a bigger, better options out there, people are gonna be less incentivized to pay for it. It's the same as it's the idea with class A, B, and C stock where there's better product available for people to buy. So the old stock technically actually starts to return more to meet the new market, but it becomes worth a lot less if it's still trading at that same rate. And so their asset value goes down. And so on the books, they're not necessarily losing cash flow, but they're losing like value. Like as a bank, their asset is going down.
Yeah.
But anyways, the bigger thing is that this is something that can happen to all of the banks. They're all going to be in this position, and it is a little sketchy because they are a big bank, like $200 billion in assets. Like that is very large.
Mm-hmm.
And they're 16th. And this is the second largest bank collapse that ever happened outside of 2008, obviously. So I don't know if it's signs for things to come. I think it is. And that's kind of what I've been screaming about is I think there's a lot more that comes from this. The other thing that happens during these is when that happens, they need to liquidate and they need to pay everybody out. They have to start calling on their assets. So what that means is if they have loans and money out, they need to pull that back in so they can pay people back. Right?
Right.
And so like if you have a loan from one of these banks, they might say, hey, we have to close that line of credit. And so if you're utilizing that, they're going to call on you to pay that back. And this is what I've always said is I'm always afraid that a bank might, right now that they're lending out a ton, and then say, you know what, we need to call these loans on your properties, or we won't do a refi, or we won't do a renewal.
Mm-hmm.
There's like the double-edged sword of renewals coming up right now, and people are like, oh, like shit, I have to go from 2% to 6%. I'm like, you might have to go from 2% to 6% and then also pay in 20% of the property value, or potentially switch banks altogether and still have to pay in 20% to just keep this friggin' loan.
Well, so let's look a little bit on the flip side. Part of what has happened as well in this last little bit, and this is going to contribute to it as well, the concerns about the overall economy have actually kept some of the pressure off of the Fed for raising rates again. So the inflation numbers came out as well in the States. They're not great. I mean, they're still trending in the right direction. Like us, they're 8 months or so down. I think they went down. Yeah, the inflation's at 6% in the U.S., which is down from 6.4%, but the core inflation is barely moved. Still, that's headed in the right direction, and the Fed was talking a lot about this idea of increasing rates more. So that modest decline in inflation combined with, man, a bank just collapsed. Like, I think people are feeling the squeeze now. I think these rate hikes are squeezing stuff. things are starting to rattle loose. Maybe that'll keep the Fed from raising rates, because again, they were talking a lot like that they were going to raise the rates. And interestingly, Canada's bond yield dropped significantly, which means all of our 5-year rates are going down. And we've got this weird, crazy thing that if the economy goes to crap, the rates usually would drop. And when the rates usually drop,
Pumps real estate up.
it pumps real estate up. Like it's this weird.
Which the Canadian economy is heavily relied on, which like, oh, is that going to work out really well?
It's just this give and forth, this back. And listen to this one, man. So this, I feel like, well, then what's going to happen? You've got these opposing forces. What's going to happen? I saw this study.
And on the flip side, the States, everything's become, because we're not raising our rates at the same pace as the States. I don't know if we talked about this last time, but it's going to create, we did talk about this last time. It's going to create the same problem because we buy everything from the States.
Yeah.
Their currency is going to be worth more than ours. Anyways, what were we going to say? Sorry.
Well,
this is such a
people
mess.
are trying to
Such a
predict
mess.
what's going on. Listen to this range. So RBC is the most optimistic. They expect prices to rise this year in Canada.
I saw
Home prices, 2.6%.
Yeah, I saw this.
But the other major banks, CIBC, Scotia, BMO, all expect prices to fall. BMO have the most bearish outlook, calling for a 14% drop by next year. So one bank thinks the market's going to go up by 2.6%. Another bank thinks it's going to go down by 14%.
Who's got more money in the market? I feel like BMO does.
Well, BMO's the one calling for a 14% drop.
I feel like they have more
RBC
in
is
real
pretty
estate.
big too.
In real estate, though.
Certainly they do here, but I think they
don't know,
were
across
pretty
the
heavy
market.
leveraged here, I think disproportionately compared to the rest of the country. But like that is a pretty big margin of error, 16% swing between
Nobody
two different...
knows what the fuck's going on. That's where we're at. Not one, like everyone has a different tail, man. And the same people have a different tail 2 weeks apart.
Yeah.
What I can say is I've had the same tail for last year that it's all going to shit.
That's true. And you haven't been right. Yeah.
What do you mean? Prices are down. Markets, shit's so much more expensive. You can't make any money on a burr.
Things are more expensive. Okay, yeah, that's true.
Tell me this.
There's some truth in there.
We're still just pumping along because we're way up on like what it was 2 years ago. But like realistically, if you're trying to buy it now and make money, like how many properties have you sold in the last couple months where you're like, this person's going to make a fortune in 6 months in this place?
Yeah, that's true. You can't bank on that.
For the last 2 years,
Yeah.
you'd be like, you'd sell it to them, be like, you just made $100,000 on closing because we took 2 weeks to close and the prices went up another 100 G's.
Yeah.
It's like,
Yeah. No, it's true.
So on the same note, I thought I would discuss with you this company that I came across today. It's called Manor Lead. Don't mind me with the little sniffling. I'm I'm still in recovery mode from a little bit of a sickness. It's called Manor Lead, and they claim to be using AI stuff from ChatGPT and different AI models to make buying, selling, and reassigning real estate much easier, as well as managing the values of your portfolios. Now, they're based in Toronto, and they're based in this 100%, it seems like, around new condos. And
Okay.
so the idea would be you're going to utilize their platform to input your condo. So you could say, I put a condo under contract that's going to be built in 3 years. It's a 1-bedroom for $500,000. Here's all the details on it. I stick it in. It's then going to monitor where the price is. So every day I'll give you an update based on what all the new cons selling for per square foot in the city. It's also going to give you projections based on what's going on in the news, interest rates, other sales, and all that. So you can help project where you're going to sell. Some of you guys may know about the program called Hopper that does this for flights.
Okay,
And so
yeah,
basically
yeah.
it follows flight trends and booking timelines. And it says, okay, when you're going flying, you say 6 months from now, and it says, okay, in 2 months is the best time to book this flight, not actually today, because everybody books during these 2 weeks because it's spring break and everyone wants to talk about their next trip. But then during the first 2 weeks of April, it's tax season and they all just got their tax bills, so they can't sell a flight to save their life. Same concept with this. And basically it's going to use, everyone throws AI out there, which is why I was kind of wanting to bring it up. And I'm like, really, what AI stuff? It's not like it's going to be self-learning.
Uses math.
It's going to be using math and data scrubbing to do it. But anyways, they say that. The interesting one is they like openly talk about assignment on there. And I feel like assignment's always been kind of like this dirty underworld in some sense, even though it goes on a lot in Toronto and it's very normal and people are okay to buy assigned projects. I don't know if there's as many like platforms for it. And so they're going to make this a platform where you can trade your assignments as well with less fees. So anyways, they have it broken out into a bunch of different sections here. They have it called, one second, let me bring it up.
It's only a matter of time before then you can buy fractional shares in these, like, kind of like the joint investing in the artwork that we're talking about.
That's the next thing. Don't worry. I got you.
Okay, I love it.
So they have manorlead.com. So it's a real estate platform that connects buyers, sellers, and real estate professionals in one convenient place. It also includes a host of advanced features that set it apart from the competition. There's a lot of this where they don't specify. There's Manor Assign. It's the first real-time assignment platform with global outreach. So I think they're trying to have a live space where you can play with assignments. And part of me, it's like stocks. And I'm like, I wonder if it's going to get to that point where there's so many flying along that it's going to get to the point where like the margin is going to get squeezed down. It's like when they used to trade stocks, paper stocks, like you'd get people who had them for $20 and someone had them for $25 and there was guys making the money in the middle. And then it got to computers trading it where it went down to like $1 in the middle and then the computers traded it down to like 1 cent because it was just real time. There's constantly these micro trades going on. And so this is what they're trying to get into with this via condo trading, which I thought was insane.
Man, there's going to be some people get left held in the bag on that.
Some people left held in the bag. There's going to be some people who make a friggin' fortune off of this.
Imagine you're there like some kid is in his underwear in his room at night and like, uh-oh, I'm stuck with 4 condos. Like, Mom?
Manor Portfolio is the world's first AI real estate asset manager to track pre-con properties and eliminate financial uncertainty. So this is what I was talking about where they're supposed to, you put in your pre-con property and they're supposed to estimate up and down where the valuation is on that. So you know at any point in time what that pre-con's worth. And then Manor Home is the ultimate tool for homeowners, offering real-time Manor AI home price predictions and many new features helping homeowners coming soon. So that's the same concept. They want to take that same model and put it into homes. I don't know. I feel like everyone's trying to come up with using technology to come up with a price prediction tool. And I just don't think it's ever going to be possible because there's so many intrinsic like things that you just cannot predict. Like you cannot predict that there's a guy who needs a 2-bedroom condo and has X a certain budget and just needs to be on the street corner.
Yeah, I mean, they can ask the people at Zestimate how well that worked out, but I do think there's a bit of science with the new construction stuff. The resale is always going to be hard, but the new construction, the assignment, if you build in a bit of cushion, I think you could probably get a decent accuracy. And these by nature, they're speculative, right? So you're offering someone a potential opportunity. There's no guarantees. Like it's not on the open market. It's not even complete. So there's a speculative nature to it. But I think price per square foot with construction costs, you can start tying those in pretty easily.
Here's my thing is I love the idea, but if in the world of stocks that's been around forever and has traded in massive volumes and massive dollar amounts, they still don't really have proper prediction tools. All these big $1 trillion banks and hedge funds have not come up with a genuine prediction tool that actually has any sort of real accuracy. How in the world are we going to do this with something like real estate?
I think the real estate market's simpler than you maybe give it credit for. Like it is simple. Do people want to buy that unit? How much is it worth? People buy it. It's a little more tangible.
But we can't predict that SVB is going to go down and then bonds are going to drop and now there's going to be rates out there that are cheap and that's going to force a little blip in the sales. Yeah. Or we can't predict that COVID's going to hit and immigration is going to come off a cliff.
Yeah, those are pretty extreme scenarios, but yeah.
Or like literally like Trudeau could go up there and be like, okay, we're cutting immigration targets next week.
Well, the big thing with that platform is when they crack down on assignments and reassignments, then they got a problem on their hands. Yeah, because
Sierra's gonna be like, yo, we need all the contact info for everybody that was signed up on Manor Assign.
Well, it just seems like that's next, right? If you look at, clamping down on people who are burring and flipping, clamping down on people who are running short-term rentals, I know that there's been a lot of talk about assignments and taxes on assignments and all that good stuff. I want to change lanes just really quickly to throw some figures out at you.
Okay.
Inventory down across the country. Montreal down 32% year over year. Vancouver down 40%. Calgary also down 40%. So that means there's, a third to almost half as many homes as there were this time last year. And we remember how psycho last year was.
Hold the phone. You holding the phone?
Yes.
Calgary is going to go down because the market is doing very well there. They're having a positive influx of people again. Oil market's doing well. So that makes sense.
That's why the supply of listings is down. Is that what you said?
Yeah.
Yeah. Okay.
Montreal's market, I don't know as well, but they've always had a very affordable market. And I think probably through this year, a lot of people decide to move there. Like I love Montreal a lot. Like it's a great city and it's still super affordable. So I can see there being a big draw there for people to go there. Vancouver,
probably because people are hemorrhaging money. They're like, I can't sell right now.
Yeah, and I think that's what we're going to see across the board everywhere. And I think we already are seeing that. We've talked about that where a bunch of people just don't need to sell or have equity in their homes or locked in at a rate for the next 3 years or 4 years and just don't need to sell. This is the same in the States. In the States, 99% of people, 99% of mortgages are at a lower rate than today's posted mortgage rate, which means those people are really disincentivized to sell their property because if they have to buy another one, they have to jump in at this new higher rate. And their mortgage payment right now is chill enough that they can afford it. Like it's not only the newer higher rate, but I went to go buy a car the other day, and the car was worth less than the car that I own now, but my payment was going to go up 70%. And I'm like, hold on, I'm going to be going into a less valuable vehicle and paying way more to be in this. Screw it, I'll just keep my expensive vehicle.
Yeah, that's the situation my wife and I are in as well. I'm like, man, we're not even going to renew her financing or her lease, whatever it is. Like, man, we're just paying it out.
This is
because we would have to pay more for the same car. The same car, only older, is what we'd be paying more for.
Yeah, and so people are in that same boat with their homes.
Yeah, 100%.
And so they're not going to sell. And on the rental side, it's like, well, rental market's doing insanely well. So if I locked in at any reasonable rate before, I can rent it and make money on this. So it totally makes sense. It goes back to the same sketchiness, but I also saw some stats that at least in Nova Scotia, our immigration is pegged to go down. So we had our biggest year last year. We're supposed to have a lower immigration year this year, lower following next year, and within 4 years be down to, I think, 5,000. We had 22,000 people last year immigrate to Nova Scotia. Within 4 years, we're supposed to be down to 5,000 people.
Why?
Which it didn't.
I mean, part of it was because there was a big glut backlog of.
I think there was a big glut backlog. And it didn't cite why. This was just like I forget what company, it was some stats company, and they had a slideshow and it was on the slide and I was like, oh shit. And there's also the idea of like, it showed still a big migration within Canadian provinces to the Atlantic provinces.
But not what it was. Yeah.
But on the flip side, I talked to 2 or 3 people today and I'm like, every agent in our office knows somebody that they sold a house to in Atlantic Canada that was not from Atlantic Canada, that they're now reselling that same house so that they can move back to Ontario or move back to Alberta.
And they have the same stories like, damn, man, it's expensive to live here.
They're like, I'm not saving any money.
Yeah.
And I gave up the lifestyle that I had come to like, and all my friends and or potentially my family.
Yeah.
And more often than not, a higher paying job.
Yeah.
So I'm probably going to bounce.
Or even if they got a higher paying job to come out here, then they found that after tax, it was a lower paying job, and now their employer wants them back and is willing to pay them higher. So you're getting the best of both worlds. You're going back, you're getting more money, and you have a better after tax income.
So my long-winded answer to respond to what do I think of the lower inventory numbers, it doesn't surprise me at all, but I don't know that it's indicative of the fact that the market's just going to continue to be really hot. I think we're going to be in this place where we're riding more along like a flatline wave. I think we've already shaved a lot of the price shavings that we needed to do. And again, I don't think we're going to dip a ton more because inventory is so friggin' low and people still need homes. There's just people who are moving out, need a house, or need to upsize or down. Like there's just reasons people need houses. There's a baseline volume that has to transact. And I think that'll keep it kind of flat, but I also don't think it's going to run away because we're seeing here now, like places get 10, 15 offers. They go over, but they're not blowing it out of the water.
Yeah. I've got this. So what's good about this number is obviously that it's providing a foundation, some support for pricing, right?
Yeah.
It's providing support for the pricing, which is probably good, regardless if what you think about excessive pricing, whatever. It's good that the market doesn't completely collapse. That would just be ruinous to too many people.
Yeah.
So it's good that the pricing is finding support.
Yeah.
What's curious is we're talking double digits, like significant less inventory this year than last year, which was in turn significantly less inventory than the year before that, and so on and so on.
Yep.
Like these are historic lows in terms of the number of homes for sale.
Yep.
And to your point, prices aren't going crazy.
No. People just can't even afford to make them crazy.
But it sort of makes you wonder, well, what would happen if we had a normal supply of houses? You'd have to think
the market would go to shit. This is what I'm saying.
You'd have to think the market would go down. So, but this leads to the next question, which is like, well, shouldn't we then be incentivizing people to sell, not discouraging them to sell? Because what we've done, and we're going to continue to try to do this.
Who's we?
We, levels of government, right? Have in a lot of ways.
But they don't want the market to tank because everyone's net worth is tied up in there. And
but-
like 35-40% of the GDP is on real estate. So if real estate goes down to shitter, no one's going to be building new real estate. And everyone's going to have lost a bunch of money in their real estate too.
I'm just thinking of some of these things that they're. Oh, I don't know. I don't even want to put this out to the universe, but all these thoughts about how primary residences are going to be commercially taxed soon.
They can't.
or not,
way.
or be subject to tax on sale.
I guess they could. I could literally see a mass. I'm not even. I'm not gonna say it either. I'm okay. I think I want to phase into the Q&A because we're gonna end up saying a lot of the same stuff in the Q&A.
I think I might have one more thing I wanted to fire at you.
Okay, fire that at me. Let's go in the Q&A because there's a lot of good questions that people asked about this kind of stuff, and I think it'd be interesting to answer them directly.
I just thought this was kind of funny, but not, and also super sad. But first-time home buyer in Ontario agreed to pay $1.96 million for a house plus $90,000 in upgrades. It was a single-family detached home.
First-time home buyer?
Yep. It would house himself, his wife, 2 children, and his mother. He said, quote, "We thought if we live hand to mouth, we can still afford it," he said. And he is an Uber driver who also earns income as a property manager and from a business in India. But with his closing date approaching, because this is obviously new construction, the new appraisal says it's worth 1.7, which is $300,000 less than he agreed to it, because he's like, oh, we got to really be careful. We're going to live hand to mouth, and then he does $90,000 worth of upgrades. He was pre-qualified for a mortgage that was between $5,500 and $6,000. And now he's being quoted between $12,000 and $15,000 because he has to go with some sort of private financing. And he has to come up with hundreds of thousands of dollars to cover the difference. Thoughts on that story?
I think this is a funny, sad moment.
I mean, there's a lot to unpack there.
So the funny moment for me right off the hop is first-time home buyer buying a $2 million house, and it's no offense to Uber drivers, it doesn't like even a really like $15,000 clear. Even before $7,000 a month cleared after everything, like that seems insane after you pay all your bills and all that. It's, anyways, seems kind of wild to me.
Yeah, I mean, we all know that Toronto's expensive, but you didn't have to buy the $2 million home. There are other options.
Yes, I think so. In that front, I get that. The tough part is, and what is sad, where you're going to see people who genuinely are just buying a normal sized house for $500,000 or $1 million, and then facing the same trouble. Is it's funny how like when we were all closing on the house and by closing day we were up $400,000.
Mm-hmm.
It's all good in the hood.
Yeah, now being down.
And now we're being down. And like these builders are crooks. They never said it in there, but that's how a lot of people are handling. Because I'm getting that. I've had people who are just like, not these builders.
People are saying that. You're not saying that.
I'm not saying that, but people are being like, these builders are crooks. They won't let me out of this contract. Like I can't close. And the builder's like, yeah, well, I get your deposit when you can't close. And like, you're a crook. And it's like, no, like.
You signed the contract.
You signed the contract and you were expecting that you were going to make a bunch of money on this.
Yeah.
You rolled the dice and it didn't come up in your favor. And now you're like trying to pin this on me.
The only thing I will say to flip that on its head.
Okay.
Is when things were going the opposite direction.
Yes.
I know a lot of builders who backed out of deals.
They did.
And
I think that was a local thing.
I guarantee you that was happening across Ontario. Or they were coming and saying, listen, we can still build your home, but it's going to cost you $60,000 more. That was going on.
I did.
So
I had a client who held out for a year and she ended up getting it for not a dime over the actual price. But it held out. The builder held out, wouldn't build it. It closed over a year late.
But she got her original price?
Yes.
Good for her.
Yeah. And then her neighbor sold for like $200,000 more than she paid.
Good for her. Good for her.
Nice.
And I'm sure and then every builder started putting these clauses in to protect them against that instances. So it's effectively like we can change the price to some degree. So that would be my only argument that maybe hook these people back up, especially where the cost of construction's come down a bit.
Yeah. I think this is one of those situations where like you guys got to work together to get the property sold to somebody else. But I was like, okay, I'm into it for $1 million.
Sold to someone else. I was going to say like maybe there's a common ground there to be found.
A vendor take back or something like that maybe, or some sort of common ground. But I don't know that he's going to be able to float a double payment. Like he went from being like, I think I can make $6,000-7,000 work. You don't just, I think I can make $12,000-15,000 work like that. Yeah. That's a big bump. It's one thing to go from 6 to 8.
$2 million, man. Chill a little bit. That is insane.
That is a little aggressive. But yeah, so that's
big down payment though.
Again,
big down payment.
My bigger takeaway from that is we're going to see a lot of that happening.
I think we've already seen a lot of it.
I think we've already seen a lot.
15 times.
But rates are going to go up again, and it's going to get worse and worse and worse until finally there's a boiling over
Why do you
point.
think rates are going to go up again?
I think rates are going to go up again because of what I talked about last time, where it's like if the U.S. market's having to raise rates in any effort to try and protect ourselves, we have to raise rates.
Yeah, we have to raise our overnight rate, but not our fixed rates necessarily.
No,
fixed rates came down again.
Long-term fixed rates will be affordable. And that's what I think they're going to try and force people to do. And that's what they want, because then there's some stability in the market. Like, okay, we have everybody locked in at 4.5% for 5 years. Everyone can weather that storm. That's what we want.
Yeah.
And people are going to be cautious because they understand now it's expensive to spend. And they've turned it, like, that's what they want. That would be best case scenario. But for all the people that just refuse, like if people are refusing to just like bite into it, like, let's keep this thing pumping, they're going to be like, well, we have to shut these people off at some point.
Yeah. The frustrating thing is, of course, even though the bond rate comes down, the fixed rates don't come down nearly as quickly. And in fact, this herky jerk up and down makes the banks say, well, we're not going to bring them down just yet. Because we see a lot of herky jerk up here. We might bring them down and then all of a sudden they're back up again. So we're just going to ride it out for a little bit, which is one of the many reasons that, greed being another, that the banks don't give you the discount as quickly as they pass along the charge.
Yeah, they need to rein in the money supply, and that's what's going on. But
hey, thanks so much for listening to this point. We got more great content. We're going to answer some of your questions. You guys have been reaching out. We really appreciate it. As always, like, follow, subscribe. Throw your questions down there. We're going to get to them. Hopefully get some insight out of this. We cover some cool topics.
We want to transition to the Q&A.
Yeah,
Before we do that, we'll see our key player of the week.
Oh, yeah.
And it kind of relates to something that you said earlier, but it is the founder of a company called Buy Properly. And what Buy Properly does is it allows Canadians to invest inside of a property deal for as little as $2,500. So they break it into shares, similar to some other projects we've talked about on here before, and you can buy in those shares $2,500 so everybody can get on the property ladder.
Yep.
The founder is Kushba Jha. She has been working in tech for many years. She worked at Amazon, Dutch Bank, Accenture, and she also has an MBA from the University of Pennsylvania and a bachelor's degree in architecture from India. She has now been working on Buy Properly for 3 years, and it's growing quite a bit. They have a large team, and they're starting this opportunity where you can invest in property for $2,500 and get the gains. Because a lot of people, I understand, trying to get on the property ladder is very, very difficult, and so they try and make this more attainable. In the States, there's a lot of platforms to do this, but Canada has been a very underserved market, especially for a place that is so heavily reliant on real estate. Like our GDP is made up. A big portion of our GDP is made up with real estate, construction, trading, like all the money and supply moves on there. So I think it's a super cool product. It's exciting to see people in Canada doing this. It's also super exciting to see a female doing it because, again, I think real estate, especially in the tech world, has been dominated by males. So
yeah, no, that's awesome. Key player of the week. Check it out. We'll probably put a link in there for people to
buyproperly.ca.
Yeah, that's awesome.
Now let's move into our Q&A.
Before we do, don't forget to nominate people. Right, we had a nomination the other day. It was awesome. If you know a key player, we want to recommend someone, we'd love to highlight them, maybe even have them on as a guest. So please shout them out. You can send it to us directly, or you can put it right there in the comments. We'd also love to hear your thoughts and your predictions for the market. We've thrown some ideas, and we've said the range. Like, what do you think? Is this all going to come crumbling down? Like, which bank is right there? Market's going to be up 2.5% this year, or down 14%?
Somewhere in the middle.
Chime in.
So I'm laughing because there's one of my buddies just sent in a bunch of them, and him and I have we share the same negative sentiment about everything, and so we have our powwows on the phone and talk about how messed up the world is. That's how he keeps me in line. I do this with you, and you're very optimistic, and I like it, but I leave and I have to call him to bring me back down to my negative level of.
I don't know that I'm necessarily optimistic per se, but
I'd say you're more positive than I am.
Yeah, that's true.
Anyways, I'll shout him out. Mitch Ham, he works at CIBC. We actually started this podcast together originally, but he was shut down by CIBC. So now we're here.
Sorry, bro.
Yeah. Reading these, he sent in a bunch, but he said, explain how someone's going to stay in their home if rates keep going up and they're already at their trigger rate. And he says this from a place of seeing many people's mortgages, and he has expressed the fact that there are a lot of mortgages that are at their trigger rate. And we've talked about this before, but it gets to a point where, so you have a mortgage, it's $1,000 principal, $1,000 interest.
No, it's not, but yeah, that's his dream. $1,000 interest, maybe $600 principal.
Well, when the rates were low.
When
we were sub 3%, you were paying more principal than interest.
Okay. Yep.
So your mortgage a year ago was $1,000 and $1,000. And then as the interest rate went up, you would sign into a fixed payment of $2,000. As the interest rate went up, to make up for that, what they did is they shaved down your principal payment. So now you're paying $800 principal and $1,200 interest, but your monthly of $2,000 stayed the same.
Unless you're on a lender that had a floating payment as well, but yeah.
Exactly. So these are just for the fixed payments. Then it got to the point where now the interest rate's gone up so much, it went from being $1,000 and $1,000 to it being just purely $2,000 of interest and no principal being paid down. That's your trigger rate. You've now hit
There's
that
a lot
point.
of people who I guarantee are at that and don't even know they're at that. But
Exactly. And so he's sitting back there doing the mortgages and he's like, literally everybody on these fixed payments are at their trigger rates.
yeah.
And so now it's getting to so now the banks, you're not paying any principal on this property.
In some case, you're over, so they're asking you to increase.
Barely servicing your debt by keeping the interest rates. And now
Minimum
people
payment, baby.
literally, and now people are going to the point where it's going to be, they have to increase their payments.
Mm-hmm.
And his question is, how does someone stay in their home if they are not going to be able to keep up with those?
Well, I mean, a lot of people aren't on variable products. We can't ignore that. Like most people in the market are on fixed products.
Yeah.
That's not the case for the last couple of years, but
Yeah.
most people are on fixed products. The people who are, ironically, were on a fixed payment product and have now reached their trigger rate are probably still better off than the people who are on true floating payments, right? Those people have gone up, probably more than even what the new post-trigger rate would be. So if those people could stomach it, and they have been stomaching it for now 12 months, increases every month, I'm sure these people that were on a fixed payment now getting a little bump are going to be able to stomach it just as well as their peers who have been stomaching it literally for 12 months. The other thing is,
How are people going to stomach it? Because there's a little bump on that. There's a little bump on their groceries, a little bump on their power, a little bump on their insurance, a little bump on their taxes.
well, that each individual person is going to be able to stomach it for a different amount of time. Like we talked about this in a previous episode that, delinquencies are increasing in every consumer debt category pretty much. So people are neglecting their other bills in the same way that they're going to neglect their grocery spend. They're going to neglect in the quality of the food that they buy. They're going to neglect everything before they neglect the mortgage payment. But at some point, yeah, there is going to be a breaking point, which is why everyone's hoping the damn rates don't go up anymore.
So one of the comments on here is break down a real life budget of someone making $100K if they bought an average home at $500,000.
Was this him as
We
well?
should do this. Was this him as well? Can we get a?
Is that $100,000 before tax or after
piece
tax?
piece of paper, please, and a pen. I'm gonna read out the numbers to you, and you're gonna write them down, and we're gonna see.
Okay. Is this $100,000 after tax?
No, I think $100,000 salary pre-tax.
Okay.
And before we go, while they get the pen and paper, we're gonna
Wait
go
a
to the next
second,
one.
man. I'm going to read this whole to you as well. This is a great little digression here. I wonder if I still have it here.
Boom. Thank you.
I was trying to find this great breakdown. Global put it out, and it was the average income you needed, or the income you needed to buy an average priced home.
Oh yeah, we talked about that before. Remember, RBC had the whole list, and it was like $270 for Vancouver, $230 for Toronto. Even Halifax was like
$100 and some odd thousand. In order to.
Calgary was the only one that made sense. It was like 126. And I'm like, you probably actually make that in Calgary.
Yeah. So, I mean, the first question would be that someone with a household income of $100,000 probably shouldn't have bought a $500,000 home. So that would be one little thing. But
no,
but they were doing it,
because they were getting approved at the time.
All right. So
all right,
this is $100,000 before tax.
$100K before tax.
Okay.
1 sec. I'm doing my income tax calculator.
This is really riveting stuff for all the people listening at home.
The people want to know what it works out to be. Employment income. You ready?
Yep.
Oh, not $1 million. 100,000. Total tax. $31,856.
Okay,
After tax income. $68,144.
Okay. So now he probably wants us to break that down month to month.
So what are you going to spend on food? Let's do that one while I get the mortgage payment.
Oh my God.
What do you spend on food? Not you.
This for household?
You wouldn't tell us, even though we all want to see.
Is this a household?
Yeah, let's say for one person.
For one person?
Yeah.
On food and drink? Oh man. $800 a month?
Okay, put in the budget. $800 a month.
Man, you're putting me on the spot.
I think.
Why are you asking me? You're just reading off your cell phone. I have to put the actual numbers in. Okay, $800 for food. This for one person.
Yeah. Okay. So
Seems
now
reasonable, right? Is that reasonable?
that's
Groceries
all.
are
Yeah,
expensive right
that's
now.
enough. Groceries are probably, I think, for one person, probably $500.
Got to get a little food and bevy out there at the restaurant. Still got to live your life.
Okay, we're gonna put 800 in. You bought a house for $500,000.
Yeah, so what's my mortgage
and you
payment?
put 20% down.
Oh wow, look at me go.
Yeah. So your mortgage payment's $2,610.
Some change
Your property tax
in
is
Halifax.
$400.
Probably more than that.
Your insurance is $150.
Yeah.
Utilities, your power is going to be $150 a month, plus water is going to be $50 a month.
Plus a heat allowance. That's your $250.
$250 a month.
$250, $350, $350 in utilities. Cable internet, $200.
It'll say with your phone bundled, so $200. So cable, internet, and phone.
What basic gas cable you got, man?
Says this guy with the Samsung A1.
You gotta have the gotta get my Amazon Prime Plus, my Paramount, my Hulu.
No. Shout out, one of our listeners can hook you up with a Fire Stick. You know who you are.
Yo, hook me up
with a jailbroken Fire Stick.
All right, I'm adding a little something extra.
What are you putting on there? So we got that.
Well, $200.
Do you own a car yet?
Oh yeah, so $500 for car payment.
Yeah, and then insurance, another $150.
Not for me. I'm a little more than that.
A
little north of that.
Do you put gas in the car?
I like to drive around a bit. You're a gas guzzler out there.
Yeah, I'm the worst.
Shit. What's my gas budget?
Probably the average person's probably $200 a month.
That it? Jeepers.
Yeah, we're an anomaly because we drive all day. What else is in there? That's got your home.
There's got to be some entertainment social of at least $400 a month.
Okay, put it in there. So then you add that up.
You got the calculator there, bro. So
okay,
add it.
Oh, you want me to, okay.
Can we do this by hand?
Okay, 3410, 3810, 3960. That's 4,300. Yeah.
And 10.
4,310. Yeah. 4510, 5,010, 5,160, 5,360, $5,760 a month.
5,700 and
I'm going to tell you we're in bad shape here, Chandler.
We are in bad shape.
We are in bad shape. And
this assumes no other bad debt, right? Like no credit card payments, no student loans, no anything.
Yeah. So you currently, just so you know, what do you think you make a month based on that number?
I am down. Actually, whatever, 70. Wow. I think we're down $30 a month.
Yeah, we make $5,680 a month after tax. So this also assumes you have no other monthly payments.
So you're down $70 a month. It's a good thing I can no longer Airbnb my basement. Thanks for the help, City of Halifax.
So there you have it, Mitch. If we break through our numbers, you make $100,000 a year, which would seem like an amazing salary, and it is. It used to be.
Yeah. Oh, it's great salary.
But the world and a $500,000 house would not seem out of this world.
No.
Really? Now, the big difference was if you took that mortgage and you flipped it down to 3%, let's take a look here what that would change. It'd probably be about, my guess, around $1,800. At 3%, your payment would have been $1,896.
$1,896. So call it an extra $700.
Yeah, and so you would have been positive $500 a month, and so
more than that, even up to $630 or something.
Yeah.
And at $1,900 a month, you would be in roughly around that threshold.
The crazier part is
of 30%, 33% of your household after tax income going towards housing. Well, not quite if you account for all the other things, but you'd be right about 40% of pre-tax income on housing when you account for your utilities, your insurance. So that would have been attainable at a 3% interest rate, or would have been what's advised.
Yeah. So, anyways, that's to answer your question, Mitch. If you make $100,000 a year, you basically should only be affording a house of probably actually affording $350K.
It depends on the down payment amount. That also was an anomaly there, where someone put 20% down on that property. Do that sucker with 5% down and see what that payment is.
That's what I'm saying. So realistically, you should only be in a house for $350,000. That's.
Yeah, man, it is tough with there. And I made this comment before about how hard it is for some, like a household on only one income. But you know what? The big thing that grinds my gears about this?
Let me hear it.
That first line item. You go from $100,000 to $68,000.
The $2,700 a month that you're paying taxes?
Like, that's psycho, man.
That is psycho.
And then you get the pleasure of paying 1.5% D transfer tax, and then you get to pay $400 a month in property tax, which is probably on the low end.
And then you can save 15% on all the other expenses too.
Yeah.
Anyways, moving onwards, upwards and onwards. That's our breakdown budget, our scratch budget. It is super hard out there, and you basically need two people to be able to actually make it work. I have no idea how even a single person like in a condo would make it happen. You couldn't, because the condo fee would suck up any savings you get. Next question, Mike Harris. Thoughts on Fredericton building tiny home communities to provide affordable housing? I'll let you go first.
Ooh, I mean, I think headed towards smaller square footage is the way things are going to go out of necessity. I think we're going to almost divide the market into two spaces where you're going to get high-end luxury homes, people that are going to continue to pay for these big McMansions, and there's going to be demand for that. And then there's going to be this push towards, I don't want to call them necessarily tiny, but much smaller footprint, slab on grade, two-story, like really basic townhouse construction. I think it's going to have to happen.
Minuscule.
Yeah, I think it's not going to be. People are going to be shocked, though, still at the cost of those units, I think. Because land's getting expensive, the infrastructure costs are expensive, they're not easing up on permitting costs. In fact, they're gouging on permitting costs. So the municipalities are, at every turn, making it more expensive to build housing. And it's going to be no exception with this stuff.
So I think this is sick, and I think it makes a lot of sense. We had the Boxable guy on, and I honestly do think that this could be the solution to a lot of our problems. And the difference would be people owning their homes versus just renting. If you look at somewhere like Japan, I was watching some stuff about, like, I think it was Hong Kong, 15 minutes.
Make sure you get your area correct, because you had this issue before.
I had this issue before.
Countries,
I might not have been.
And people in cages, and it was
Japan.
a little dicey.
I'm 90% sure it's Hong Kong, but it's one of the major cities in Japan. Look, I don't get the specific detail because it doesn't truly matter. Okay. But the concept is
might matter to the people in Hong Kong. Okay.
The concept is, the major league concept is, they have crazy density, way more density than we do, and way more people than we do, and they've been known for having some of the most expensive. One sec. Now you've got me all tripped out.
We also, I'm just going to take
Tokyo, not Hong Kong. What am I saying? I'm an idiot. Oh, we have to edit that now. Okay, anyways.
No, I don't think we should edit. I think we should just leave it in there.
Just roast me completely? Okay, fine. That's fine. Anyways, 50 minutes outside of the core of Tokyo, you could buy a single-family detached home for how much? This is considered to be one of the most expensive real estate markets in the world.
How far outside the core?
15 minutes by train.
Jeepers. I don't know. 400,000 US?
$350,000 US.
Jeepers, that is cheap.
And they're proper homes. They are stacked up, like 2-story homes, the whole shebang. Well, what they've done and the way they've made it more affordable, and what we need to be doing, and this is the same with Montreal, is their parcel sizes have gone way down.
Yep.
Like this mentality, like we're all like, holy shit.
New lot here, they're like 6,000 square feet. It's got to be at least 6,000 square feet. It's like, well, that's weird, man. I only want 1,000 square foot of house per floor. Like, that's a big house. You put 3 stories, that's a 3,000 square foot home. Why do I need a 6,000 square foot lot? I don't even want to mow my yard.
That's the other thing. They don't let you build on most of our lots here. They got to have a certain percentage that's uncovered and this and that, which I get some of the environmental concerns, but the suburban sprawl that we have, I think, would go the opposite way and say it's causing more environmental issues with the way people travel and commute, and people are not maintaining these areas. Like, it's not a saving on the green space. But that's what they've done there, is they've shaved it down. So every time a house gets old, they basically tear it down and they'll build 2 or 3 more houses on the same lot. And by doing that, they're able to keep the prices affordable. Because again, these $2 million homes that we're talking about are not comparable. Like, they're crazy homes. Like, these are like 4,000 or 5,000 square foot homes, like you said, on 6,000, 7,000 square foot lots, full basements, multi-car garages, all these crazy things. And it's like, the shit's expensive because we expect to live in some crazy type life, like in these insane homes with these big lots, and these big backyards with pools and all that. If you really boiled it down and actually were comfortable living in a tiny home, which honestly a good majority of the population is, who rents an apartment, then you'd actually have the opportunity to buy. And the other thing, in Japan, the central bank there offers mortgages at 1%. So like the average mortgage payment on a brand new home there is $850.
Yeah, that's crazy.
But all your values in the land. The other thing is, there's a misconception that all the values in the land, at the end of the day in real estate, the values in the land, the structure on top isn't actually what carries the value. Those can be income producing assets that are used to validate the value of that land down below. but that's what it is. And so they've really jumped into that model. Long story short, I think the tiny homes are great. I do think we're going to have a switch to it. And I think that's the only thing that's going to keep our real estate propped up. And I do think our real estate will stay propped up because it holds so much value for everybody in our country that if they were to ever let it fall off a cliff, the detriment to our system would be way too dramatic to ever save. So they have to keep it propped up. And so that'll continue to go forward. But shifting to a smaller, more dense construction style will be the way to actually give people an opportunity to buy into it.
They also sometimes I think they overcomplicate it. So it's like, okay, like you can do this many if you make them each condos and blah, blah, blah. And then what if you do cluster housing here and this, but they each still need a separate water line. Like, I feel like we make it way too complicated. To your point, we're just like, hey, how come we can't make them smaller lots and they share one sewer line?
Mm-hmm.
Right? Like, let's just make it simpler. Like, why do they have to, go through a condo
there can
registration?
also be some spots that are 100% coverage that are not just downtown cores. Like, there should be areas that you can be able to do that. The difficulty is where we have a big population that doesn't live like that. The areas that do end up receiving it become kind of slummy. Right, and that's what will happen is you get.
Oh, I see. Yeah. Because if it's not universally adopted as a legitimate thing, it becomes
there's certain there's pockets that are like massive lots, and you know what I mean. So,
well, think about like one of the most popular areas here in Halifax is the Haliburton.
Yep.
Right. And it's often gets rated one of the best neighborhoods in the country, et cetera, et cetera.
Yep.
There is no way they would let you build the Haliburton now, which is ironic because it's not very tall.
Mm-hmm.
Right. But
houses a shitload of people.
The laneway in the back. Right, where the driveways are effectively behind those, they would never let you get away with something today. They'd be like, "Oh my gosh, this is too crazy. This is some far-fetched novelty idea. I can't see it." And they were kind of built pretty small, right? Like if they didn't have basements, they're basically 450 square feet a level, right? You would get so much pushback for trying to do something unique like that now. But why did they build those? Because they were in a damn hurry. They desperately needed housing, and they slapped those suckers up as quick as possible, as cheap as possible, and they forewent some of the rules.
And it's the greatest thing.
Yeah, exactly. So
they actually have a similar rule in there as to what they have in Tokyo, which is the one big kind of sticking point is you need to have 6 feet of road frontage.
6 feet.
1 car length. That's the whole idea. You can have 1 car for your home.
Yeah.
So every house has to have 6 feet of frontage. Other than that, send it. They do have a minimum lot size, but it's so small. But that's also, they end up like not having like parcels that just never get used because a little corner on the end here can hold a house. So someone will buy it and build a house there.
What I think is going to be a tipping point is like, so if we're saying secondary suites are fine and that people can live in them, why can't they be the only house on the lot?
Like cut them off and turn them into little mini lots.
Well, but like, why are we stuck to this idea of lot size if we're going to say, no, that's okay to have a separate structure there and someone live in it? That is normal. In fact, that's good. Well, if that's the case, then why do we need the lots to be so damn big?
It's because of everything else that goes on with our housing here. Is the people who own in a certain neighborhood don't want that stuff to start taking place. It's the same concept. 100%. It's all to protect your own personal value.
Yeah.
But what people don't realize is when they densify these things, it actually pushes their value up even more.
Yeah. But there's certain people who are at certain phases of their life that they don't care as much about resale value as they do about living in the neighborhood the exact same as it's been for the last 20 years they've been there.
This is true. I think we're calling some people out that definitely don't listen to the podcast.
They do not listen to the podcast.
Anyways, we're changing gears now to the next question. That's enough of us rambling about it. I'm moving to Japan. Peace.
I don't think you're going to be able to find it with your geography skills.
I'm going to end up in the wrong city, but I can keep flying around. What happened? Hong Kong luxury cage homes.
Oh, jeepers.
The tiny homes of Hong Kong. You're gonna get me in trouble. They make luxury.
Stop. Okay.
Okay. So next question. Vic D. Hillen. I think he's already a real estate agent. Is this a good time to go full time as a realtor?
Ooh.
The hesitation would suggest no.
I'm always so torn with this because I genuinely believe if you have the skills, if you have the work ethic, you can drop into any market and do well. I don't know this guy. I don't know if he's got what it takes.
He asked if it's a good time. He didn't ask about a personal assessment.
But it could be a great time for someone. May not be a great time for him.
You're saying Vic doesn't have a good
No, I'm saying like
base?
I actually, so that's a great point. That's a great point. It is far from a good time. But that's not to say that you couldn't jump into the market and crush it. But it is far from a good time. It's maybe the worst time.
It's a bad time.
Other than if you like, only had your license for the first 6 months of COVID where like things were bad before it got really, really good. But like, no, this is a bad time. This would be right up there with like other terrible years. Like I got my license in 2009
It's the worst time ever.
and it was bad. Yeah,
No,
it's a bad time. I guess,
So
but that's
two-
not to say he couldn't get into the industry and crush it.
2 things. It's the best time if you're prepared to grind your ass off. And then if you can get through this time, everything's going to be gravy. And it'll teach you to what it actually means to grind and grow a business. On the flip side, I think it's a terrible time to get in because I like going with the wave. And right now, there are way more licensed people than there's ever been. And there's way less volume than there's ever been. Not ever been, but there's way less volume than there have been in previous years. And so when you combine a ton of agents and not much volume, that gets averaged out. So the average amount of deals each person does goes down. And in a time when rates are up and everyone's trying to save money, people are going to be aggressively looking for alternative options to cut commissions or go after the cheaper brokerage or the cheaper agent. So for me, it's a very difficult time to get in. I would like to get in when the market's starting to rise and it's an easy gradual growth with you.
Yeah.
But if you want to make a full-time career out of this for the rest of your life, like Chandler said, I don't think any time's a bad time, but you're going to have to grind your butt off right now and prepare to spend a few years eating mac and cheese.
I think there's an implication with his question about full-time, i.e. he's got another source of income.
Yep.
Is this a time to throw that other source of income away
No.
and go into it? And
No.
I would say probably not.
Double down on that main source of income.
No, you need, we just did some math. You need 3 incomes.
Next question follows in suit. Ben Etzel, best career in the real estate industry. What is the best career in the real estate industry?
I was going to just say, again, with this guy's question, like, I don't know why more people don't try to be mortgage brokers, but whatever. It's just not as sexy. Then what they need is if Netflix makes a show about the glamorous life of being a mortgage broker, all of a sudden you'll see that. Like, we got to get the boys together.
Financing sunset.
Yeah, exactly. Oh, I'm out with my underwriter last night. Shit got crazy. Yeah, I mean.
So you're saying best career in real estate is mortgage broker?
I'm not saying that per se, but
We need an answer. What's the best one?
Best career in real estate.
Number one, best one. You got sewer scope guys.
Yeah.
You got septic inspectors. You got home inspectors. You got builders,
Best career.
developers. You got survey guys.
Maybe the appraisers. The appraisers are sitting pretty good right now.
You think though the amount of stress that they're under, like think they show up to our properties and
that's true.
he's
They're
like,
just like, come on, man, get that number up.
aren't we pros? Like,
Come on.
I need this. This is my whole
Man,
life, bro. I need this refi.
I would say maybe like housing advocate.
The best career in real
Government-funded
estate is
housing
not in
advocate.
real estate.
Yeah,
Government housing advocate?
government funded housing advocate working at a nonprofit. That's probably the best gig right now.
Not
Everyone
right now.
No, well, I mean, like you actually had
Everybody needs you.
yeah, but everyone loves you.
Okay, so final answer.
I guess I don't know, man. I don't know.
All right, I'm going to answer
right now.
I'm going to answer it. Mortgage broker.
Okay.
But it depends.
I came in so hot, so confident, and then just walked it back. Oh my gosh. You didn't even dip your toe in before you were what? Put it right back out. Gosh.
Okay, no, but that answer can't be. That answer depends on the person.
Absolutely, for sure, maybe.
Okay, I'm gonna give it. There's a double answer to this. Best career in real estate is being, not including owning. I'm gonna keep ownership out of this. If you're just taking a career, best career in real estate is investing in real estate. But if you're gonna do a job, if you like to be social, like out on the streets, selling your body, then real estate agent.
Selling your what?
I'm joking. But if you want to be out on the streets, chatting with a bunch of people, going through a ton of homes, like it's a very fun, like for me, I feel like as an ADD person, it was great because it was always every 15 minutes, something new is taking place. And so it like keeps your ADD in check and it's fun because you're crushing deals and all this is going on. So it can be an amazing game once you get established. It doesn't start like that. When you start, you're usually twiddling your thumbs in your house being like, what the hell did I just do? As I've gone through it, and I think a lot of people would agree that our agents, mortgage broker looks a lot more appealing because you start to have a more structured lifestyle. like the real estate agent can be very unstructured, right? It's all
Yeah.
over the place. But the mortgage broker becomes appealing because there's a bit of structure there where it's like banks only operate, let's say 9 to 5. So you kind of have your weekends back. You kind of have your evenings back. You're also more often than not in a fixed location. So you can like actually predict your days. You can like pack a lunch. You can do normal shit, or you can even eat lunch, like things like that. Like as a realtor, all the memes online, like the jokes, but we literally just eating random crap as we fly around the city and are trying to keep everybody appeased. So I think the mortgage broker world is something that can also be, the volume can be brought up a fair bit on one person and they can still handle it. And then with a small team, you can really scale how much volume you can do as a mortgage broker more easily than as an agent.
Yeah.
But yeah, so I don't know. Best career, I think it really depends on where you're at. Best career for me at the end of the day is investing. But if I was to do it all over again, I would have started as a mortgage broker. That being,
Okay.
I say that, but I don't know if I would have made the actual amount of cash that I made as quickly as I did.
It's trade off there for sure.
So,
Any other questions?
yeah, another question. Nate Mack, spring market in Halifax, time to buy or is it going to go crazy? I don't know if it means crazy down or crazy up, because if it's going to go crazy up, probably should buy.
Yeah, I don't maybe quite understand the question either. Spring market. I mean, in the spring, historically, especially here, more listings come on in the spring. There's also more buyers competing in the spring. So I've actually gotten some of my best deals in the, in the winter months because there's less competition. You can maybe be a bit more aggressive with sellers, and a lot of sellers who list, say in the dead of winter, it's because they're highly motivated. They have a reason for selling as opposed to a want to sell.
Oil bills.
I think that this is tricky because the implication of the question is, like, is there going to be an opportunity to get in before it goes crazy? And I think to your point, well, if it's going to go crazy, maybe it's a good time to start looking even right now and try to catch something on the way up. I don't think there's going to be some big collapse. Like people who are still thinking like, I'm going to wait till it bottoms out. It's like here in our market, right? Like, I don't think there's much give back. If there is, it's going to be small, and it's going to like prelude to another comfortable run. And you have to remember there were many periods of time where people bought in, say, 07, 08, 09, even 2013, where for 24 months they were pretty flat. But you know what's happened since then? They've doubled their friggin' money. So, trying to time the bottom is one of the worst things you can do. I think if you can find what you feel is a good deal in that moment and is not an overpay and you're comfortable with the payment and all these things, I think now or the spring either could be a great time.
Okay, that was a long-winded answer. The answer is it's always a good time to buy.
Oh my gosh.
But for me, I'm going to go back to the same thing I said last time. It's really dependent on your situation. You have the money ready to go and it's doing nothing for you, and you see an opportunity that you feel is a deal and you're being educated on that it is a deal, I don't think it's a bad idea to buy. And exactly to what Chandler said, you can never time the bottom exactly and you can never time the top exactly. So as long as you're like, okay, well, I'm getting a bit of a discount from last year, so I'm getting the bit of discount that I'd be comfortable taking on, and I would have paid this price last year and been happy with it, then go for it. It may continue downwards on a downward trend for a year or two, and you might shave off another 5%, 10%. But if you're not planning to sell in a year or two, it doesn't really matter.
Yeah.
And it's going to go up. The other thing that could very well happen where there is absolutely no inventory is the market could stay flat and then just start going right back up. Right? So if you said, oh, I was going to wait it out because I thought there's going to be another 5% down, and then you have to pay 5 or 10% even more, you're going to be in bad shape. Right? So if it's a long-term hold, I think now is a good time to buy. And again, it depends on what type of property you're looking at. But there's no set answer for that ever.
Yeah, I think you have to get back to the fundamentals, right? Which is buying a good location, buy a product that's always in demand, like 3 bedrooms, 1.5 baths, good school district, those things. Revert back to the things that are tried and tested, because that's going to protect your investment, especially if you think you might be looking at moving again in 3 years. So something that's also rentable. Like those are things that you should really keep in mind in this market. I think that's just good sense.
100%. I think in the investment property world, there's going to be a lot of people that are open to trading hands with it, because they're like, man, I have a renewal coming up I'm not interested in, or like rent caps can keep me down, like, and they've just got a bunch more expenses. I'm seeing it a lot where a lot of my clients who we've sold into in the last few years have decided they don't really want to do investment properties. They made their money and they want to move on, or it's not worth the work to them.
Well, some of them are just looking and be like, wait, these numbers don't make sense.
Yeah, exactly.
Like,
And
what am I supposed to do? It's
like we just went over.
Can't buy them at these numbers.
Exactly.
Yeah.
Last question here. Is there a place to check what units sold for specifically in Kelowna? There likely is. Oh, I'm going to go ahead and say that we don't know off the top of our heads. But
No.
if you are an agent or somebody in Kelowna that knows the answer, if you can DM us and we can connect you guys, that would be great.
Yeah.
And that's what we are trying to create our forum for. Our forum's actually created. I'm just very slowly populating it. So that you can ask a question like that and hopefully somebody in Kelowna can immediately answer you and you have an ability to meet them through that space. So that'll be good for that. That's all the questions we got.
Yeah. So as always, I mean, if you guys have other questions, fire them at us. Social media right here down below. Really want you guys to keep engaging with the content as much as possible. It really fires us up and keeps us going and gives us ideas and things to talk about. So anything else, Neal, before we take off for today?
Yeah, no, nothing else for today. Thanks for listening.
Thanks so much. See you next time.
Thanks so much for watching the episode. I hope you enjoyed it. If you did, press like. Don't forget to subscribe. But also check us out on Instagram and TikTok. You can find all the links below. Thanks again for checking us out.